Hey everybody, welcome back. No fancy intro tonight. We have a lot to go over, so I want to just dive right into it. As always, subscribe to the channel, click all notifications. What we go over here is extremely timely. I get asked a lot why I use the 55 and the 50. We may get into a little bit of that tonight, but there's some key levels here that we really need to drill into and talk about. So we're just going to jump right into it. And I apologize for how rough this is, but instead of editing and going through all that, I really just want to get into the meat of what's going on and get this out there. And I wanted to see the futures market open before I did this video. So we're going to point out what I think is fairly obvious. And please comment on that if there's an issue with this being more raw than it usually is. It's going to be packed. So here's our key level, this 45, 42, 75. And we can see that that's an area of contention right in here. It's definitely something that we want to watch. And we can see right here, we can see right here how we rejected here. Here's your control bar. Here's the doji, tries to get up, can't, breaks. This becomes a control bar, breaking that flag. 1, 2, 3 down. Doji takes control, up, bearish engulfing, down, undercut, piercing pattern, boom. All right, so we've got all this and we lived it, right? Because this is where we were waiting for the end of the world. This is where we bounced and everyone said the bounce couldn't possibly last. This is the bounce and now we're trying to figure out what to do. My concern is that we're starting to make excuses for why the market's doing what the market's doing. So we're going to put the 22 in and now I'm going to drop the 55 there. And now I'm going to drop the 50 there. And now I'm going to drop the 55. Right? So you see the difference? On the way down, the 50 might catch me a little bit faster than the 55. So I will look at both the placements, but we're sitting on here. Now, here's what we don't want, and that's why I threw the 50 in here, because I know a lot of you use it. I'd rather use the 55, and there's a reason for it. But two reasons I'll give you right now. Number one, on the way up, I'll always catch you over the 50. I'll always be ahead of you. If I use the 55 and I know people are looking at the 50, I'll always be ahead of you. Number two, on the way down, I don't get false positives. If you use the 50, you're going to get a false positive. What do I mean by that? You're going to break and then bounce through it because everybody's watching the 50. By the time I break the 55, you know you're through it. Also, the 55 is a fib sequence. So there's a couple of reasons why I use it. But what I'm trying to get at now is we're sitting on that. So everybody is looking at that. Let's get rid of the 55 for a second. See how you're drilling in right here? This was the most troubling part of the day for me. There were two things that were troubling, but I want to get into this. Now, as everybody knows, the market is dynamic and you have to treat it as such. So you can just kind of see that line there and it's pointing out the obvious. We're going to get rid of it. Left shoulder, head, right shoulder, neckline. You should be able to see this. I'm going to use this as the neckline. And this is not what you want to break. And I'm just going to point it out again. Left shoulder, head, right shoulder. You do not want to break this. Now, if you are here as a left shoulder, you are here as a head, and you're here as a right shoulder, I don't care if you agree with me, if you see it, you don't see it, it's fine. This is also troubling. Now, are we going to say, oh, it's a light week, so it doesn't matter? Are we going to say that it's September, so it's seasonally weak? I'm trying to get through Wednesday. So when you're listening to this video and you're trying to figure out what am I talking about, and he said 2 weeks ago he thinks we're going to new highs by the end of the year. That's fine. That's still a possibility. That doesn't mean that I'm not going to 4,400 first or 4,420 and testing this breakout, right? So I have to trade what's in front of me. I can have all the ideas and warm and fuzzy feelings I want, but I have to trade what's happening. This is what happened today, and I have to be aware of it. There's some other indicators I use I'm not going to get into. I'm going to point out the most obvious things that are going on. If you look at this control bar right here, this control bar right here enveloped 1, 2, 3, 4. I'll call it 4. It didn't envelop this. This enveloped 4 hours of trading. This one down bar. What did this down bar do today? It enveloped what? 1, 2, 3, 4, 5 hours of trading. Okay, so we had 5 good hours and then we had selling. Now, this is where it gets interesting. See that right there? 9 o'clock. All right, so off the open today, what'd they do? Dump. What they do, end of day, last hour of the day. If you watch these videos, you've been watching for some time, we usually look at the last hour. It's something I'll be covering on Saturday in great detail. The last hour tells you a lot about what institutions are doing. So they dumped off the open. They made you feel warm and fuzzy. They even did you a favor and overcut. So the number one level that you must watch tomorrow is right there, guys. Okay, see that 45.20? This was the big concern that I had of the day. You cannot get over that. You're having a real tough time. And there's some other things in here that we had a real tough time with today, and we're going to get into that. So now we have right there, that level. I'm going to go back to these. I like them more. So you have that level right here. You're unable to get over it. So if you take nothing away from this video, you're going to take away two things. You're going to watch the ES tomorrow. So the way that I trade, so you understand this, it goes index, sector, stock. All right. Index, sector, stock. That's how I trade. Okay. I trade from the top down. Some people trade from the, top down. Other people will what? Bottom up. I'm not bottom up. I don't want to just pick the stock and then have the market drop. If they're going to sell equities, they're going to sell all equities. To think that I'm a genius, I'm going to pick the one stock that's going to go up, it's not going to happen. I need to go with the trend. So what I'm seeing is I'm seeing these bars off the open, and this bar in the last hourly, I'm seeing them envelop bars. Now, if we want to focus on this, you have this 9, 10 o'clock bar that broke down there. So you start going through these bars, 9 o'clock, what happened last Friday? Straight down. If you start looking at where these control bars are happening, they're happening at very specific times. And that's troubling. Last hour, straight down. And then you start looking at it, lunchtime, no one's paying attention, down, right? This is a change in trend. And that change in trend is giving us this head and shoulders. Now, it's not a huge head and shoulders, so let's just measure it out. Rule of thumb for a head and shoulders, if you want to measure it, you take the peak of the head to the neckline. Now, you do not take the number, which is 48. You can all see that. You take the percentage, 1.06. Please comment when I do these little educations. I try to do them while I'm doing the actual live so that I can work them in. It makes it easier for me than creating another video. I can always chop them out. So if you look at that level, what is that telling you? If we drop that down, you use the percent. You don't use the number. So that's telling you basically can get back to the neckline. You can get back down to here, 44.50. So if that happens and you come down 1%, that means certain sectors can come down 3%. Remember rule of three, we went over that before. If certain sectors will come down 3%, that means stocks in that group can come down 10%. Now, I hope you followed that. You can always watch that again, but I think it was important for me to get this out versus making the fancy opening this evening. So now you know exactly what you need to watch tomorrow. You have two levels, 4520 and 4500. That's your universe. Now, why is this important? Why am I making such a big deal about it? I'm making a big deal about it because Morgan Stanley upgraded global energy. All of global energy was upgraded today. All these names look like they were going to run. All of them look like they were going to run. And I get this. I get the mother of all gravestones. This marks tops. You don't want this on a sector. Now, we could make excuses. Oh, it's light volume. And is it light volume? Yes, it is. It doesn't matter. It's still there. Right? If you see a duck, it's still a duck. So we have to pay attention to it. Doesn't mean that we might give it the same credence as we would if we were in like a stronger market or a weaker market, but we have to pay attention to that. And usually if these crack, there's a greater than 50% chance. So when I point out patterns, just FYI, the patterns I usually point out have a greater than 50% probability, or they're on the neckline of 50%. So in other words, if I point out an engulfing, like a bearish, bullish engulfing, they're like 51% chance if you did an analysis on them. Some of these are a little bit higher. The more candlesticks in the pattern, the higher degree of probability. So anyway, you might want to listen to that again. So you're right here and you got this gravestone, and we're sitting here in energy. Well, that was our leader. All right, so what's our leader now? Well, here's NVIDIA. Now, we had a day trade in NVIDIA today that we did quite well on, and this is what kept striking me about it. These are all my little arrows pointing it out to the guys in the community. I'm not going to pull up the trade right now. I've got too much to go over. But we did this little trade, made a couple bucks on it. We're long already on it. You can see the move off the open, the rally to 488. Here's what's troubling me about this. We're hitting this on multiple days. We're hitting these levels on multiple days. We're all over the place. I think it even goes back further. Multiple days. This is where we broke down. Then we had earnings. This is where we found some support, rallied up, pulled the flim-flam, broke, rallied back up, support flips to what? Resistance until it becomes support again. And then what's it do? Support. So that's support right now, guys. We do not want to lose 482 on NVIDIA. We just do not. So then we're sitting here and we're looking at this over and over again. 1, 2, even if you count this one, 1, 2, 3, 4, 5, 6, 7. Okay. Everyone is telling their desk, everyone on their desk, on these big investment banking desks, and that's how I trade. I listen to what those guys are telling their institutional clients and what they're talking about on their desks. That's how I was raised to trade. It's how I trade, just the way that my mind works. So if I'm looking at this, What's troubling me is that this is the name that they're all watching to talk about tech, to make sure that tech is going to hang in there. I can't get through 488, and I should be able to get through 48, and I'll show you why. Now, you've seen what I was looking at there. We're going to remove those drawings. I'm going to blow this up. I'm going to pop this in. So now you have the 12, the 22, and the 55. I'm above all of that. I'm up on the day. I should be moving. And instead, what I'm doing is I'm slowly, very slowly making what? A higher low. It's very quiet, but it's there. So I'm still long this. I'm watching this very, very carefully. I'm not really crazy about what I'm saying here. I'm just going to be blunt. I'm not really crazy about it. I need this to stabilize a little bit better. This is not really what I wanted to see. I like the undercut, and I like that we closed over. I like the positioning of the SOXX. I like that the SOXX did not break today. What I don't like is I'm not getting any real, as I refer to it, I'm not getting any real lift in the market. That's becoming a concern, and that's what I really wanted to address. I understand that you're coming back over the weekend. The weekends are, after this long weekend, everyone's getting the kids together. You'll see it. And we do the pre-market lives today. They weren't as busy. The volume's lower. I get all that. I understand all that. But stocks could still go up or down. And right now, this is what they're choosing to do. We're going sideways. I'm not saying that it's over. I'm just simply saying that this is something that we have to pay attention to. We're still above the 55. We're still got a 1222 cross. AMAT still looks like it's going to rip people's faces off. But what happened when we broke out today? We couldn't even get over the open. And it's these little, the devil's in the details, guys, like here. And I know people will be like, oh, you're picking it apart. That's what I do. I fight for inches, man. I look at this and go 154.82, 154.54. So what does that tell me that they did right here on AMAT? It tells me that they flipped over, right? Got people's buy orders and dropped it. That's what they did right there, right? There's no reason to kick that up 30 if you don't have a buyer up there. So they kick it up, they take everybody, and then they drop it. And they're going to take them into day 2 tomorrow, right? Because today's day 1, and then you'll see how they go. So this was something that I'm watching very carefully. We'll get more into what I think is going to happen there. I do want to talk about NQ. If you had to determine what's holding up better, NQ is definitely holding up better. There's no question about it. You're up here, you're not breaking. It's doji after doji. I've got the 55 pointing up. I have a 1222 cross. It is very hard to look at this and assume that this is going to come in. And this is where it gets interesting, because does that mean we're going to go back into these tech names? And I don't have an answer for that, but we're going to go through a couple of them and look at them, because I'm still on this legacy kick, and we're going to get to it. But so I look at this and go, okay, well, this is holding up. Well, why isn't this up the same way? And you can say, well, hold on one second. They always give me this weird one. Why isn't this holding up the same way? Why did this break today? Why are we sitting right here? Well, maybe we are going to push. Maybe it is going to push. But the amount of time today that I was looking at this and waiting for 45.20 to break, and the amount of times that we can just not break that level, and it is the simplest of levels to break, guys. Like, that is not a tough level. There's not a lot there if you come across here. There really isn't. I mean, you're really talking about 2 days ago, and we can't get through it. And they're working us down. And you can see how they're working us down. We've got into it. So then you go to the NQ. That's not what they're doing here. Let's flip to this, make it blank, and then put it back in the 5. That's not what's happening here, is it? So we have this differentiation going on. And the question is, how long is that going to last? And then you kind of drill into this a little bit and go, okay, well, there's this W. So we kind of have to pay attention to the W, but at the same time, you're not able to get over 15.8, 15.58. So then you're going to want to watch that tomorrow, 15.580. So if you're going to want to watch a level tomorrow, it's 15.580. And I do appreciate everyone's comments on this weekend's video. I do appreciate you sharing it. It does show that it's been shared, and I really do appreciate that. It helps me greatly, and it helps with the algorithm. So keep doing it. You'd be surprised of the comments I get from people when they find us. So you see our level right here, and this is the level we have to watch. That's all I know right now. We have to watch that level. We have to see if we're going to get through it and go from there. So then we drill back into this and we take a look at it. And it's not broken, but we're not really going anywhere. We're just doji after doji after doji. Well, eventually we're going to have to do something. And then you look at this level and go, well, we're holding that level. So are we holding that level because we have demand there? Or are we holding that level because there's so little supply there? And I don't have the answer to that yet. We're going to find out. But I don't like this. And this is becoming troublesome. What I do like is XBI. You're starting to see some action in here. We're starting to run up a little bit. LEBU. Now, today wasn't the greatest day, this reversal towards the end of the day, where they're just hammering it down. But you're starting to see some action here. You're starting to see some interest. What was troubling to me more than anything was this. And I'll show you. So XLRE had to make a decision, and I'm starting to leg into these REITs and take positions in these REITs. I like the value plays right now on some of these REITs trading under book value, substantially under book value. Same way I played the home builders when nobody wanted them. So I'm looking at these REITs, and then you start popping these in. Well, you start getting through this and going, well, we couldn't break the 55 up here. We broke the 22 again, and now we're barely hanging on to the 12. And then look at what happened here today. We're rolling on the RSI. So there's some things here, guys, that are they're not really jibing. So then we look at that, and then you go, okay, well, what did financials do today? Well, financials are up here. They couldn't hold. And then what are they doing? Well, now we're down on the day. All right, so how'd we do? Not only are we down on the day on financials, I want you to understand this when we're talking about this, okay? Here's the 55. We just cracked. Where we don't want to be is this battle where we break the 55, we rally over, we break it, and we start going sideways and just getting chopped up. And maybe we're leading towards that. Maybe that's where this is going. What I don't like about today with the financials, we closed at the low, we broke the 22. The high of the day was what? Near the open, and then we closed near the low of the day, and this is starting to roll over near the 50. So where's my leadership? All right, so where is the leadership? All right, so we really don't have leadership. It was supposed to be energy, that fell out of bed. Financials are rolling. So, all right, so maybe it's the industrials. Well, the industrials rejected. Well, why are the industrials rejecting? The industrials are rejecting because of the dollar. Okay, this is the exact opposite of what we wanted to see. We talked about this on Saturday. And one of the things I brought up on Saturday was I can have my beliefs that we're not going to break out. And that's what my belief was, that I don't see us breaking out. I'm not going to get into the whole nuances as to why. But then this happened. And we discussed this on Saturday in some detail, where here you are. And now that you're here, well, we held the 200 and we bounced off the 200 or the 200-day moving average. Even though I have a death cross over here, we still did it. We still bounced. Whether I wanted to bounce or not, I'll show you right here, and we'll get rid of the 12 and we'll get rid of the 22. Hopefully you can see why I wanted to do this the way that I'm doing the video tonight and just get to it, because there's so much to pack in here in such a short period of time. And I try to keep these short during the weekdays. So, okay, so here's our death cross. Then we come here, a real quick, easy way to see how this is going to play out. Watch over here and watch these numbers. Move that over so you can see them. So you start about a week out, and you see you're at 103 to 102.33. Then you move it. Okay, each one's moving at about 10 cents closer together. So right now, if the 10 cents is moving it closer together, and I'm 60 cents, call it 70 cents apart, within 5 trading days or 2 weeks, I've got a golden cross here. So within 2 weeks, you're going to have a golden cross on the dollar. Well, I don't want a strong dollar right now. If we get a strong dollar, there's a couple things that are going to happen. Number one, rates are going to tick higher. That's the first thing. That's the 10-year. Rates will tick higher. If you get a strong dollar, we're going to lose the industrials. If rates tick higher, the banks are going to be out of position. Okay, see how it's all connected now? If the rates are going to move higher and banks are out of position, they're going to tighten lending. So you start looking at all these pieces. And what I'm still trying to figure out then, if that's the case, right? If that's the case, this is where I'm losing it a little bit. And you can always drop it in the comments and let me know when I see I'm losing it, because I'm not following it. If that's the case and we have tighter restrictions, well, why is the consumer not falling apart? Because the consumer is not falling apart at all. We're seeing the exact opposite of that. We're actually seeing investment banks upgrade other investment banks because they're talking about more M&A coming, and that they are aware of what's in their pipeline. This got upgraded today. Jefferies got upgraded today by Goldman. So that doesn't make a lot of sense. All right, so then we have industrials. They're going to fall because the dollar is going to be stronger, right? Strong dollar means weak industrials because they sell their products everywhere. So then you start looking at XLY. Well, Amazon kind of hung in there. All right. So you start looking at these names a little bit, like Williams and Sonoma. I mean, that's not really falling out of bed, guys. You're forming a flag there. So you start going through these names. Lulu, 52-week high, right? Look at the flag on Lulu. I mean, that's something. Put that on a watch list. So that's definitely something that you need to watch. You're at 52-week highs breaking out of a base, right? MELI. Look at this, breaking out again. So we're seeing these names break out, and we're trying to connect the dots. And then you're seeing energy names, and they're not really moving. And then we have these industrials, they're kind of falling apart. And then some of these small caps are moving, some of them are not. I don't believe Manchester couldn't find a deal. And I'm wondering if the restrictions on doing the deal were that tight, and maybe they were so tight because Manchester, they just said, oh, we're going to walk away, we're going to come back in 2 years and do the deal. Well, if you have a buyer, you do it now. What's going to change in 2 years except the price is going to be higher? So then you think about it like, did they have financing problems? Could they not finance the company? Could they not finance this merger? And maybe that's the issue. Maybe that's why it took so long. I don't know. I'm speculating on that, but it's definitely something that I'm thinking about. So then I look at that, and then I look at the most recent guys that were trading up. Like one of the names that I've been trading is AFRM. Well, look at this today. This was something I did fairly well on, and it could still do well. But I've got a wick over here. See these long wicks? Long wicks and streaks. I don't want to come in and walk into this. I have no interest in walking into that tomorrow. And I'm not saying you're going to. But when you have them, you kind of have to pay attention, right? When you have these like inflection points. To me, the problem with this bar, candidly, is that I finished at the low of all these bars. Even the red hammer, I was at the high end of the hammer, meaning this was all rejection, right? Wicks are price rejection. I didn't have sellers. I didn't have buyers up here, guys. So that's the first sign of weakness. I'm not saying you can't run it over tomorrow, but that's the first sign of weakness. So I'm out of the majority of that. So then you start looking at some of these other little names and you start trying to see, well, how are they doing? Let's clean that off. CVNA has been on a tear. Well, and now I'm getting Doji City up here. So you start connecting these dots. And what am I trying to point out to you? I'm trying to point out that there was a tremendous amount of uncertainty. And at the same time, you're watching XLK move higher. Now, is XLK moving higher because Apple is going to come out with their conference in 2 weeks? I mean, Apple had a great day. And we saw this because they're buying it ahead of the iPhone release. They actually undercut. We talked about this in the community today where the undercut, and I said, oh, you're probably going to go flat on the day. You went a little higher than flat, but there's like a $2 move there. It was a pretty simple trade if you did it. All right, so now we're encompassing that and we're back to these levels. All right, so Apple. All right, so there's an Apple trade, and that's why XLK is moving. Microsoft, that looks pretty good. All right, and so you go through this, and hopefully you get what I'm trying to put down is you've got a lot of conflicting data here. So we're going to have to just let the price tell us what it's going to do. You see the 50 right here and how you're flipping it? And then you come and take a look at this. Look, I'm right at the 55, but I have a 22.12 cross. So am I going to get over this? Am I going to close over that? So that's something to think about, right? Let's go back to this and just show you something here on the way up so you can see what I'm talking about. Okay, see what the 50 is? See what the 55 is? So anyway, you see what's happening here? So are we going to flip that or not? Yeah, I don't know, guys. I don't have an answer to that. I have a control bar here and I'm sitting right here. You go and take a look at Tesla today. One day you're up $10. The next day you're down $10. The next day you're down $10. The next day you're up $10. I mean, it is, and you're between the 22 and the 55 if you're looking at that. So is that going to reverse? We'll find out tomorrow. Usually there's 2 days of that move. So usually it's 2 days, like you get this and maybe you get a more powerful move. We're not getting that at all. We're getting this kind of wonky pattern here. I'm not really sure what that's going to do, but it's definitely something that's worth watching, certainly worth watching tomorrow. But I'm a little concerned that the leaders are not really leading. They're starting to roll a little bit here. Maybe it's going to go this way. Maybe they're just going to blow right through these and just reverse. You're trying here with Meta. The XLC looks good. So is that what's going to happen? Tech's going to lead and everything else is going to go by the wayside? I mean, look at the home builders. They're done. That's done. That put a fork in it. Like that doesn't get more technically broken. I mean, you tried to rally, failed, and just look at the selling today. It's constant and you're at the low. You failed at the high, couldn't get through any of this and you cracked and now you're below the 55. For those that use the 50, I'm going to pop it in. All right. So why I like the 55 is if I break the 55, forget the 50. If I'm below the 55, I have way more probability of being right. Because sometimes they'll just trip you below the 50 just to do it. I can do a whole series on why I use these. But if you look at that, there's no way you could be looking at the home builders and going, you know what I need to do? I need to get in there. They're all trading way over book value, 2x, 3x book value. So they're not holding. So where is that leadership? And I don't see it. Now, I do want to do this because I think it's extremely helpful. We've been looking at this S&P watch list and we've been looking at these names and saying, are we above or below the 50 line on these? And these are the stocks, the 500 stocks above the 20-day moving, or 20 here. So S&P 500 stocks above the 20-day moving average. And you can kind of see here that we were at 50 and now we're breaking 50. Then you get into stocks on the 50 above. Now, one of the things I tried to explain is that you have this trend that you need to watch, but very rarely are you getting to a 90 reading and having these moves over until you're getting to like a 15, 16. Every time that you've gotten to a 90, every single time since you've gotten up here, you've gotten to these trough levels before you've gotten to 90 again. Now, it doesn't mean that's going to happen every single time, but it sure as heck is giving you single digits to, 12, 15, 20 before it happens. This time it happened and you're at 20. And maybe we are turning that corner here, but we really have to watch this very closely. I go here and I take a look at stocks above the 5. We just ran up to 96 on Thursday, but I need to get down here again before I can even get even a short-term oversold position. And then we get to the big dog, and this is the one we really have to watch. We held the 50 in here, and now as we're holding that 50, right, because you want to hold 50% above the 200-day moving average, you definitely want 50% above that, because if I get under this, we know that means what? We know that means our performance is going to be poor. So this is somewhat concerning today's action. And I understand that it's light volume. I get that. And I understand that it's the Tuesday after Labor Day. I get that. I don't want to talk about the seasonality because it is what it is, right? This is the hand that we're dealt. And it's not like they're rolling. This is what is troubling. It's not like they're rolling into defensive names. They're not buying defensive names. That's not what they're doing. And so what are they doing? They're just parking capital. I mean, that's really what they're doing. They're just getting out of the way. And that presents a larger issue of why are they doing that? Why are you just getting out of the way? Right? Why aren't you buying healthcare to be defensive? Why aren't you buying consumer staples to be defensive? Why are you just going to cash? And that becomes an issue. And then you start looking at like IONQ, which was one they were crushing in the room today. I mean, this looks beautiful, but at the same time, the market's not going to be held up by these kinds of names. And we can see that tonight with, you see what happened with ASAN, how that came in. That was a good quarter. Zscaler, I thought was a good quarter. Stock's not reacting favorably to it. GTLB was the one that was a book I was showing someone to read. But GTLB is doing the best of the three, but they weren't bad quarters and they're not holding. So I don't have leadership. And this is what I really don't understand. I don't understand why they're selling the defensive. Are they rotating out of the defensive and they're rotating into tech? Is that what's happening? Is that why tech outperformed today? So, I mean, maybe that's part of it. Maybe that's what I'm missing, right? So then you look at like IGV, which is the one I would really pay attention to. And why would I pay attention to IGV? Well, you start looking at IBM. I still made an all-time high today. I mean, if I was going to tell you that you need to buy IBM, it's going to make an all-time high this year, you would tell me I'm crazy. There it is, all-time highs. So you start going through these names and looking at them, Dell, all-time highs. Even though you didn't really crush it today, but you still look at these names and it's fascinating that these are the names that are leading. And I would pay attention to that. I think it's worth paying attention to it. We're either getting to the point, we're at some kind of inflection here. And this is what's troubling. We're selling down on these defensive names. And I'm trying to figure out the easiest way to explain this. We're selling down on the defensive names today, right? At the same time we're selling down on the defensive names, the dollar is going higher and the yields are going higher. And we see it. We see all this going on. So they're not going to just go out and buy tech. And if they were doing that, then the numbers that I showed earlier, where I'm showing and pointing out stocks above their 200-day moving average, if they were buying all tech, well, these would still go higher. And they're not. So that becomes a troubling piece of the puzzle. So as I try to connect these dots, the easiest thing that I could say for now is to watch the levels that I gave earlier, the levels that I gave on NQ. And I'd be leaning, if I'm going long, you have to be looking at tech. It's the only real thing that's getting any kind of support or bounce right here. The other names, they're cracking. And there's very little doubt about that. But you have to look at these two levels that I gave. It always gives me that weird one. But you have to look at these levels. And you need to hold 4,500 tomorrow. And then you have to watch 4,520 because you hit it 4 times today. You couldn't get over it. Maybe I'm not connecting a couple of the dots. You're welcome to comment in the comments on that. But the lack of lift in defensive names in this kind of environment is concerning. I understand that XLY was up. I understand that XLK was up. I understand that XLC hung in there. I get that these names are holding in there like Google. I got it. I get it. I'm not saying that you're heading for Armageddon. What I'm trying to figure out is, are they rotating out of defensive names to start buying tech again? which I'm not convinced of with the percentage drop that we saw in stocks that are below their 50 and 200 today, or are they just going to cash until they figure out what's going to happen with the dollar? That's it.